Time now for us to take a look through the day's top business news stories with Stephen. Hi there.
Hello, Catherine.
And we're going to start off with one of those stories we were mentioning there in the headlines. The Greek finance minister, he was in Paris at the weekend, met his French counterpart.
Yeah, that's right. Yanis Varoufakis trying to drum up support for a new debt deal for Greece, as we've been saying. He told reporters in Paris that Greece would pay back all of the money that it owed. But what he's hoping for from this tour around Europe is that the country's international lenders will give them more time to pay back that €240 billion bailout. Now, that strategy may win support in some European capitals, but it's unlikely to affect the European Central Bank's position. They're now the really key player to watch in this debate. The ECB's emergency funding is keeping Greek banks afloat. Any threat to that could provoke a banking collapse, now considered to be the greatest risk of forcing Greece out of the Eurozone if that were to occur. Well, let's listen to what the Finance Minister, Yanis Varoufakis, had to say about that.
Provision of liquidity at times of stress is the job of the ECB. Our job is to enable the ECB to do its job by ensuring that we have agreement amongst ourselves and with the European Commission so that Europe can give itself, not just us Greeks, but itself, the breathing space to come up with a new European social contract in which Greece can stop being a deficit country forever.
Yanis Varoufakis speaking in Paris at the weekend. We're going to move on to the United States next. Stephen, taxing times for the American government, trying to clamp down on companies that shift their profits abroad to avoid paying tax at home.
Yeah, that's right. The measures are set to be unveiled in the budget later today in Washington. The idea is to secure some tax revenue from the estimated $2 trillion that American companies earn and stash abroad every year. President Obama sees this as a way of bridging the gap between the super rich and the middle class, as Delano D'Souza now explains.
A 2016 budget proposal that will have corporate America sitting on the edge of their seats. The US president plans on closing a tax loophole which currently allows US firms to avoid taxes on foreign profits. Barack Obama will call for a one-time 14% tax. This value will then be increased to 19% in the future. He expects to raise $238 billion, money which will then fund large-scale infrastructure projects. The plan requires approval from the business-friendly Republican-led Congress, and it's part of the president's campaign to shrink the gap between the very rich and the middle class.
The record shows that we were right, and middle-class economics does work. And the other side was telling us this would be a disaster, and it would kill jobs and raise the deficit. Healthcare costs would explode, and none of that happened.
Multinationals that have been benefiting from the tax loophole include GE, Microsoft, Apple, Pfizer and Merck. The new tax proposal is part of a plan to boost the domestic economy by allowing the government to take a slice of the money US companies stash abroad and reinvest it at home. Obama also plans on slashing the US corporate tax rate from the current level down to 28%, a level that's still considered high when compared with other major economies.
Right now, Stephen, how have the markets started up the week?
Well, a likely positive start here in Europe. The main European markets opening up, but not by very much. Shares in Ryanair, the low-cost airline, down 2.4% after it lifted its full-year profit forecast, but says that earnings growth in 2015 will be muted. We're also following news from Zurich of the private bank Julius Baer, their shares rising 7.7% after they announced a massive cost-cutting programme, that in response to the changes in the Swiss currency that we've been talking about recently. Over in Asia, a survey of China's manufacturing industry showing activity weakened there in January. That's not left the Shanghai Composite very impressed, down 2.5% in trading. Just the Kospi and Seoul seeing some small gains there in Asia. Let's take a quick look next at some of the day's other top business stories. And steel workers at 9 oil refineries in the United States are beginning strike action today, their biggest walkout in 30 years. The United Steelworkers Union ordered the action on Sunday after failing to reach an agreement on a new labour contract. A full walkout could affect more than 2/3 of US oil production. The chairman and chief executive of Greece's third largest bank have resigned as part of a shake-up at the lender. Eurobank's announcement comes after a meeting with the new Syriza government on Friday, although the firm says the two events are unrelated. Deposits have been pouring out of Greek banks since before the election, and their share prices have been pummeled. And the recent turmoil on the markets has hit hiring in the City of London. A survey by recruitment firm Asprey Marsden shows the number of new jobs created in January was down 18% on last year. The agency says hiring was affected by the plunging oil price and dramatic moves on the currency markets.
All right, one last story for you now then. And Stephen, we're talking about a new way of paying for your goods, not entirely contactless, one might say.
Yes, that's right. This is to do with McDonald's. It's going to allow some of its customers to pay for their meals with love. It's a promotion, so to speak. It's a promotion that was announced during the Super Bowl last night. This advertisement airing during the halftime break. Those randomly selected at the tills will be asked to call a family member and tell them they love them, or do a dance, or give a high five or a hug in exchange for payment for their meals. Up to 1 million people are expected to benefit from this over the next 2 weeks. The promotion is running. Comes at a time, though, of course, McDonald's is having difficulty getting people into their restaurants. Their net profit fell by 15% last year in the US, and we've had their chief executive stepping down as a result. So trying to attract people back with love.
Needing some good vibes by the sound of it. Thanks very much. Stephen Carroll, always got good vibes on the business news for us here on France 24.